It's batter up for Alcoa. The aluminum producer leads off earnings season in just a few minutes. We've got three different takes here on the stock, a stock that's pretty much in a deep slump. We've got Lloyd O'Carroll, analyst at Davenport with the fundamental view from Richmond, Virginia. We've got Carter Worth, chief market technician at Oppenheimer, who's watching the charts in New York, and Mr. Steve Quirk, head of the trader group at TD Ameritrade in Chicago, who's going to talk about the options action for us. Lloyd, I want to start with you with the fundamental view on this. Your price target is $18 a share. You get the highest price target of any analyst that we've seen. Why are you so bullish on this stock?
I expect to see higher aluminum prices as we go through this year and next. Higher aluminum prices
at a time when there's so much uncertainty about the global economy, when there's concern about a slowdown in China, when there's concern about, potential bigger problems in Europe?
40% of production in the world, the top 40% of the cost curve is underwater today. We've seen production cuts in the last month. We're going to see more. And as production gets cut, that's going to lift prices in the early this year. And then when the economic stimulus in China turns into stronger economy,
that's going to be more demand. Okay, Carter, yes. I want to get over to you for the technical perspective here. We know why Lloyd is bullish. You also are a bull on this stock. Tell me why.
Sure. Well, I mean, this is just a case of so bad that it's good. The thing is basically collapsed. You're talking about 1850 to 850 over the last 12 months, down 55%. It hits October low and then reapproaches that low in the last couple of weeks and has held there. Actually started to ricochet, printing 9 and change right now. And this recent strength takes the downtrend, a well-defined channel that it's been in, and breaks it above that downtrend. So we think it's the early stages of the healing process, and there's all sorts of upside. We're looking for a while, not quite 18, and that might well happen in time. We think the immediate objective is 12.
Here we are before the close, before the earnings announcement comes out. Carter, would you buy it right now?
Right now.
Right now. Okay, Steve Quirk, you said there's some options activity that you would recommend investors look into as we speak. Tell me about that.
So using the analysis Carter just provided us and Lloyd did, I would take a look at actually purchasing the 9-10 call spread in January, and I can do that for essentially parity. I can do that for about 40 cents, and I'm not looking at the stock right now, but I think it's trading right in the neighborhood of 9.40. What I'm doing by placing that strategy is mitigating the amount of capital that I have to put up for this trade, and diminishing the amount of risk that I have while still giving myself some nice profit potential. You've
also talked about risk reversal as being a theme of your trade here on this stock. How does that all fit in?
When I first started thinking about it, I was contemplating a risk reversal, and risk reversal is essentially selling a put to pay for the purchase of a call. So I'm still looking for upside, but I was looking for a way to finance it and get myself a free trade. Prior to the earnings, the stock has moved up, so that trade has been essentially I've been unable to place that trade. So this is the best way, in my mind, to, again, mitigate the risk that I have while still enjoying the benefits of a rally.
So by the January 9-10 call spread. Lloyd, back to you for a moment. What are you anticipating on the earnings front? Most analysts are looking for about a penny a share.
I think it's going to be roughly break even, but it could be a nickel on either side of that. Yeah, year-end accounting has a lot of true-ups and a fair bit of noise.
Okay.
So around break even.
Okay, we shall see. Thank you very much to all of you.